All right, everyone, I think we will get started now. This is Rebecca Nadel. I'm the director of the Business Renewables Center. We have lots that we can cover today, so I think we'll get going. I do have a couple of introductory opening things that I wanted to cover. So let me start first and foremost with our agenda. So as most of you guys know, we're here to talk about sort of the corporate 101 when it comes to procurement in Canada and especially in Alberta. So we're going to spend lots of time going over that, as well as some market insights and analysis from our guest, Sara Hastings-Simon. So that's what we're going to cover today. We'll wrap it up in an hour, so we'll get you back to your day job on time today, I promise. The next thing that I wanted to do was thank our sponsors. We are really fortunate to have Marathon Capital, Greengate, and EDF Renewables who are making today happen. And so a big thanks to all three of them. They are active members in the BRC community, and we're really grateful for all of their support and assistance. So thank you, Marathon, thank you, Greengate, and thank you, EDF Renewables. And then the other thing that I want to just pause for a moment, as I often do, many of you are familiar with this website by now if you've come to other BRC events, but just pause and acknowledge the land on which each of us happen to be residing at the moment. So for BRC Canada, we operate out of Calgary, Alberta, and that is the traditional territories of a number of groups. So the Blackfoot Confederacy, the Stoney Nakoda First Nation, as well as the Tsuut'ina Nation, and Region 3 of the Métis Nation of Alberta. So if you don't happen to be from Calgary, or you don't know the history and the background of where you're physically located, or you're just curious, I would encourage you to go to this website, native-land.ca. It's a great resource to kind of find out more about the people in the places where you might now call home. So thank you for taking a moment to kind of think about for yourself, and maybe for others who you see on the call where they are dialing in from. All right, so let me do just a really quick overview of the Business Renewable Center Canada for those who are not familiar. Our mission in life is to simplify and accelerate large-scale renewables across the country. And we do that in three ways. One is just around awareness and building everybody's level of understanding around the market and how this industry works. The second pillar is around connecting people and building a community, so really around networking. And then the third way that we do that is through tools and services. And so this is a mix of primers and guidebooks and roadmaps and so forth that we have available to our members. So that is our mission in life and how we do it. The next slide just talks a little bit about the tools and the resources that we have available. So there are some that are available to the public. So some of these primers, a basic version of the deal tracker, which we'll talk about later today, and some recordings from sessions like this, previous sessions like this, as well as some shorter versions. So if you want the 5-minute snippet around PPAs and environmental attributes and so forth, you're able to get that from our website. So that's some of the tools and resources. If you do become a member or are already a member, you'll have access to our portal. And so there are, of course, a deeper array of tools available behind that, other webinars, our newsletters, details behind the tracker and so forth. And then we have a number of events that are for our members only. We do quite a lot focused on the buyer community in particular. So we've got bi-monthly buyers calls and a boot camp that we're going to offer next month for the first time. So lots available. If those are of interest, we encourage you guys to get in touch. Not surprisingly, we have a bunch of material on our website. So the best way is to look there. If you're looking for a snapshot of who are our members, who's in the community right now, this is a array of logos to kind of give you a sense of the types of buyers, intermediaries, and developers that we have in our community. So that is how we look at our membership in those three categories. So it's a nice mix of big names, recognizable names, maybe a few newer names, as well as folks across those three categories, which is, I think, what the next slide will talk to you about as well. So we encourage you guys, if you're interested, to give us a shout, regardless of which of those categories you are a part of. So happy to give you information either through our website or by email or a phone call at any point. So look forward to connecting with some of you guys more deeply after this session. All right. The next thing that I would like to do, of course, is introduce our esteemed panelists. So we are really lucky to have Sara Hastings-Simon with us today. She is quite well known in many circles. I imagine many of you guys know of her already. She is at the University of Calgary, but we are so happy that her prior life, or at least part of her prior life, was actually being both the brains and the brawn behind the Business Renewables Center and getting us started several years ago. So she has a great history in this space. She was with industry before that. And if after this call, you just need to get more of Sara, there is a way to do that. If you're not already subscribed to her podcast, you can go back and listen to some of the past seasons. The new one is about to start as well. So there's lots of ways to follow Sara and to follow her conversations and her research, as well as with some of her colleagues. So Sara, we're so glad to have you here today. Thank you for joining us.
Yeah, thanks for asking me.
So we are going to start off this webinar with a couple of polling questions. So before we go into the content here, I'm going to pull up a couple of questions to get a sense of who is in the audience. So if you guys can do us a favor and just tell us if you're with a big company, a smaller company, not-for-profit, government, or if you don't fit in any of these categories. All right, well, I think we are seeing a reasonable mix. This is pretty standard for our sessions, but it's nice to know we've got some big companies as well as some smaller companies out there. So I think we will close this polling question down, make sure you guys can all see the answers here as well. I know there's a few folks in the other category. So again, I think there's a great mix of audience members. So that's really exciting for us, and that will help us shape our comments as we go. All right, next question that we wanted to ask, because we are trying to cover the whole of the country. And it looks like in terms of location, folks are mostly in Alberta, but quite a few outside of the province and some in the US. So again, we will craft our comments accordingly. And then last but not least, people have a mix of levels of knowledge about the procurement process. So we will try to make it easy for the newbies, but it sounds like lots of experienced folks on the line. So Sara, I think we're going to get some good tough questions as we go, which always makes it fun. So I encourage you guys to use the chat box, or sorry, the Q&A box, if you have particular questions, and we'll be monitoring that as we go. So don't be afraid for you guys who are in those more sophisticated groups to send your tough questions in. And if people do want to make comments with some of those experienced deal makers out there, then we're happy to have some of those comments as well to the audience. So that's great sort of foundations for us to start this conversation. Thank you everybody for giving us some feedback. That is really helpful. Let us start with some basics here, Sara. So we're talking about renewable energy. It seems to be a really popular topic these days. Why is that? Why are we seeing this push for companies as well as institutions, government and others, but why so much interest in buying renewable electricity these days?
So I think there's a few different factors. I mean, one is really just this growing ESG push that's coming really from the customers of companies as well as the investors that are looking for companies to be demonstrating leadership in ESG and in particular in that environmental space. There's also companies that are getting that push from their through the war or the competition for talent. So the important stakeholders also include employees, and especially the younger generation of employees are really interested to be working in places that are kind of living the values that they want to live. And then at the same time, I think as the costs of renewables are falling, the economics behind this just increasingly makes sense, either as a way to eventually reduce the cost of electricity that companies are paying, certainly as it relates to also carbon compliance. So here in Canada, where we have a carbon price, that's a big piece of it. And then also, being able to hedge future power prices as well, right? So we're seeing a lot of volatility. I think we're going to be seeing increasing volatility, certainly in the resource market, in the natural gas market. We're already seeing that now as we progress through the energy transition, and you have kind of this real a lot of room for volatility in the interplay between the supply that sort of wants to be there but is trying not to build out too long beyond the end of its useful life, and so aside from cost savings, really also just price certainty is I think increasingly important as well, and it's a trend that's really grown quite a bit over time.
Yeah, I couldn't agree more. And it's interesting because there's such an array of rationale and drivers behind this. And so every participant probably has a different mix of which of those drivers float to the top and which are sort of ancillary, secondary benefits to getting into this space. But it's interesting that it's not, talking about where this is coming from, it's all the way to investors and Wall Street these days now, where we didn't necessarily have that in the past. So thank you for that overview. Okay, let's get into green electricity or renewable electricity. What the heck does that mean? So what makes an electron green? What is it that is fundamentally behind renewable electricity when we use that term?
Yeah, I was trying to think of a good joke of like what makes an electron green, but I couldn't come up with one. And maybe that's partially because electrons don't actually have colors, right? And so once you have a unit of kilowatt hour of electricity generated from a source, the electricity itself is no longer inherently renewable or not. What we're really talking about is the source that generated that electricity. And so to be able to track and keep track of that, environmental attributes are really that representation of saying, hey, this kilowatt hour of electricity that you're using now was generated from a renewable source, and that may be a renewable source that's moreover new as opposed to one that had been around for a long time. So there's different elements of that attribute, but fundamentally it's really around being able to track the property of the electricity separate from the metering that you're doing.
And in terms of making sure that that those attributes aren't double counted, that you are tracking this sort of certificate, that's all third party verified, right? Like, how do we make sure that this is all legitimate?
Yeah, that's right, exactly, and it is through the use of third parties that can track and make sure that each kilowatt hour that's generated from a renewable energy source only gets one environmental attribute associated with it, and that when that environmental attribute is quote unquote used, so you can use it in different ways to meet a carbon compliance or to track towards a target, that it gets counted and you don't get to use it again a second time.
And so sometimes there's different terminology that comes in here. So, we talk about RECs, we talk about carbon offsets, we're talking about environmental attributes. We've got some Americans, it looks like, on the line, US versus Canada. Why all this different terminology? What are the nuances between some of these words that we use?
Yeah, great question. So, environmental attribute, I think, is really the umbrella term. So that's the idea that there is some renewableness associated with the power. RECs really came about out of a U.S. Legislative requirement. They were sort of invented as a way to track requirements for a percentage of electricity generated to be renewable at the state or local level, and so that really tracks directly the renewableness of the power, and it's sort of binary. It's either renewable or it's not. And as we were saying, it's validated and tracked and managed by third parties, and there's quite a sophisticated system now of tracking with the Greenie RECs is the one that's, I think, referenced here on the slide. Carbon offsets is it overlaps, and you can't sort of count both, but it's a slightly different way of thinking about the environmental attribute of this power. So rather than thinking about its renewableness, is it renewable or not, carbon offsets really attempt to track the amount of carbon that is saved by generating power from renewable energy as opposed to some other source. And so it's a little bit more complex in that you have to do a bit more math to figure out, how much a kilowatt hour of power is worth, or a megawatt hour is worth in a carbon offset, because it depends on, the sort of the base case, what it would have been generated from otherwise. And this is, quite important, obviously, in Canada, where we do have a carbon price. And for example, in Alberta, where, carbon, and again, this, works differently in different regions again, but in the Alberta example, there's sort of different ways to track or to generate these, either through an offset protocol or through through the kind of output-based allocation through the carbon pricing rules directly themselves. And again, here, they need to be, properly tracked and validated, and depending on exactly which kind, again, who does that validating is different. But I think the key thing to know with these two is that really depends a lot on what you're trying to achieve with your procurement, whether you're going to be interested in tracking RECs or offsets. So, if you're looking in particular at renewable energy goals, then RECs are going to be what you're thinking about. If you're looking at either meeting carbon compliance, or you have corporate level goals that are focused on carbon more generally, not specifically renewable energy, then carbon offsets are more appropriate. And just anecdotally, I do seem to notice, and I don't know about folks on the call, but I have heard that to some extent, I see more talk about RECs in the US and more talk about offsets in Canada, also in terms of companies tending to have more, what did I want to say? Oh, to have more of a target based on the carbon footprint in Canada. And maybe that links to our, carbon pricing, or maybe it's just a historical accident.
Absolutely. And I think, the other mix in the industry that we see is that there, as you've talked about, is this sort of regulatory compliance component. And then there's this voluntary companies wanting to do this because they've set targets, their shareholders, their investors, other stakeholders are asking for it. So for those who are listening, you'll often hear us sort of talk about or toggle between those two spaces. Is this a voluntary thing, or is this a compliance driven thing? And that's where this choice that you've outlined makes a real difference.
And that compliance piece, just one last on that. I mean, that compliance piece, because the carbon price in Canada is set to continue to increase, all the way to $170 a ton, that element, I think, becomes potentially quite important as a driver of future demand here, because when you, kind of do the math around the value of the carbon offset at that price, it starts to get very significant.
Yeah, absolutely. So we'll definitely get into some of the dollars here shortly, but let's go to sort of the options that are out there. So we're going to talk about PPAs in great depth momentarily, but when we talk about buying renewable energy, there are a few options out there. So I wanted to give the audience a sense of what are those options. So can you talk us through some of the other alternatives and how PPAs then will fit into that mix?
Sure. So I think we have a slide that lists them, and I'll just kind of run through them. But basically, there are definitely different ways to purchase renewables, right? And so one, often people think about when you say that you're going to buy renewables is doing things like on-site solar, or if you have a very big facility, even on-site wind. And that's really a power generator that's attached to the roof of your building, or in the land next to the building, and you're using that power directly, and you're maybe exporting some of it back to the grid. It's all of these are have kind of pros and cons. There isn't one right answer for the way to procure renewables, and for many buyers, you may be looking at a mix to meet the needs that you have. But what I would say with on-site solar, it's great if you own or have the ability to put it up. It's often it's typically much smaller in scale than some of the other options, because we're talking about building size footprint. Then when we get into more utility scale, the corporate procurement of renewables, I think really, it's fair to say, started to some extent with the idea of unbundled RECs. And so that was really the sort of beginning maybe of this all. And there, what you're doing as a buyer is really purchasing the environmental attribute alone. The power is sold off to somewhere else. And it's, I think a lot of buyers, even today, can end up using this as a way to sort of get into the corporate procurement space. And so maybe you have a corporate procurement target and you're intending to do a virtual PPA, but you need, a couple of years to kind of get through that process, as we'll talk about, and so to kind of start working on that procurement before you're ready to take on a PPA. Green tariffs are really where you're basically going to your utility and they are purchasing renewable power on your behalf. And that's particularly important in regions where you don't have the ability to do PPAs or virtual PPAs because of the market structure. So it's a little bit of that. And then that brings us to the large offsite virtual PPA, which I think we'll discuss in more detail, but that's really entering into this contract for a new renewable energy project that gets built. So, compared to the unbundled RECs, I think people often say it has, it has a larger impact. And then you're also really entering into a long-term contract for the power itself. And so that's where you start to get into this, you're sort of hedging power prices.
So lots here in terms of the context. Let's now do that deep dive into PPAs. So for those who are not familiar, can you kind of talk about particularly the virtual power purchase agreement? What is this? How does it work? What are some of the characteristics that we should know about?
Sure. So I think, again, on the next slide, we have a bit of a high-level overview, because I think as soon as you start to show all the arrows going back and forth, it gets a little bit confusing. But at the basis of it, what a power purchase agreement does, or a virtual power purchase agreement, and the virtual or not, just basically has to do with if the buyer ever takes official ownership of the power, or if the generator is sort of selling it into the market on their behalf. So it doesn't change where the electrons flow at all. It's really a contracting detail. So sometimes we tend to use them interchangeably. But the basis of a PPA is that there is a fixed price that gets set that the buyer will pay for every megawatt hour or every kilowatt hour of electricity that gets produced. And they're buying both with that price, both the electricity and the environmental attribute, either the REC or the carbon offset. And then what happens is that the power in a market like Alberta's, for example, that is that is a competitive market, the power gets sold into the market. And so if the price received in the market for that power is higher than the price that the buyer has promised to pay, they're going to actually get back that difference. And if it's lower, they're going to be making up that difference. And these are typically long-term contracts. They're in the range of 12 to 20 years, and really they're fundamentally backed by the buyer's credit. So by entering into this agreement, the buyer is really enabling a new renewable energy project to get built. And that's where you can claim that additionality, that really through the actions that you're taking as a buyer, you're responsible for this wind farm or this solar farm that gets built. And what it's costing you, if you want, is the difference between the fixed price that you've agreed to and the price of power in the open market.
All right, so you've warned everybody about this slide with all the arrows on it. So let's move to this crazy slide to try to put a finer point on how these things flow. So can you talk us through here, just like you said, there's electrons, there's market price, there's some other terminology we haven't even talked about, fixed for floating, which this slide starts to illustrate. Can you kind of run us through one more time in case people didn't quite get all of what you just shared?
Yeah, exactly. And so we have the buyer is on the right-hand side here. And so they are sort of entering into a few different or staying with a few different contracts as well. So one thing to notice that it doesn't change how the electricity ends up at your site, right? So that top part, you still have a relationship with your electrical utility. They're still delivering power to your site, and you're still paying the market price for that power. What happens is that you're adding on the lower part of this diagram, where you've entered into this contract with the renewable energy project. Those electrons are flowing into the grid upwards. You're getting the environmental attributes, and then these sort of three arrows at the bottom, black arrows, that's where the netting out really happens, because as a buyer, you're paying the market price for the power that you're getting from the utility, and then you're responsible essentially for the difference between the market price and the fixed contract price. And so essentially what you're paying at the end of the day, is that difference. And so sometimes people will also refer to them as contract for difference, and they're very, this is, I think, unfamiliar maybe within the electricity space, but it should be very familiar to many whose companies are purchasing other things, with a similar kind of financial structure.
So now that we sort of scared everybody with the complexity of this, let's pull it back and talk about why would you want to do one of these in the first place? What are the benefits of entering into a PPA? And you kind of alluded to it in the beginning, but can you talk us, off the ledge, if anybody's on the ledge right now, to why there's some real value here?
Yeah, so we talked about, there's a number of different reasons, and I think we often find that for buyers, they have maybe one primary reason, and then they're able to find some of these other benefits, or because, and we'll see that when we talk about kind of the detailed roadmap that this goes through, one of the things to know about a VPPA is that you really need to involve a large number of people from different parts of the operation of the business. And so different people will often see different types of benefits. And so it's kind of a little bit of a layer cake of benefits there. But those include this, the environmental attribute, whether that be the renewable energy certificates that are kept and held, or carbon offset values that are kept and held towards meeting some kind of voluntary goal, or carbon value that's used to meet a regulated compliance requirement. And then there's the ability to, of course, just make positive claims about the renewable nature of the power that's really powering your operations as a buyer. And then, as we do see the price of power of renewable energy falling, there is the potential to actually even save money through entering into this long-term contract. And so basically, you're using the fact that you're willing to sign that long-term contract, and then that you need that power to lower the cost of the renewable energy, and ultimately to lower the cost of power for your organization. And then also, as opposed to, say, going and doing the work yourself, certainly, more options of how to purchase renewables than just, say, putting something on the rooftop.
Super. Thank you for taking us through that complex space there. And just a reminder to the audience, if you do have questions, please type them in the Q&A box. We're happy to kind of track those as we go along. Because it's a large audience, we're not going to be able to take folks off mute, but would love to take your questions as they show up in the Q&A box. All right, so Sara, we've talked about sort of the technicalities of all of this. So in Canada, how do buyers and sellers sort of transact? Why is this different in Canada than in the US? And why do we suddenly start talking about Alberta so much when we're in this space?
Yeah, so we've seen the majority of deals happening in Alberta and within Canada. I mean, and the reason for that is really the structure of Alberta's power market. So Alberta is the only open competitive power market in Canada. It's very similar to, say, the market in Texas, but there are a number of other markets in the US that are similarly open, where you see these deals happening. And so what that means is that there's no special permission or approval that's needed to enter into these kinds of deals. Were somebody to want to enter into something, into a VPPA, for example, in Saskatchewan, you would have to get approval and kind of have the Sask Power agree to wheel, to put this power into the transmission system. And so it's definitely the easiest place from a bureaucratic and just being able to get it done perspective. I think that the market rules in Ontario do allow in principle for this kind of deal to happen. But because of so many of the extra charges that exist in that market, it's much harder to make the economics work. And so, and then on the flip side, of course, we also see that Alberta is among the best in Canada for wind and solar resources, and there is room on the transmission grid for those. So kind of all of that together means that we see a lot of this happening in Alberta. I do think that there's potential in other regions in Canada, through cooperation with the provincial governments, or, say, with the power utilities there as well.
So this is a great segue because we did have one question around working with utilities and mention of Nova Scotia, which has their Green Choice program
Mhm.
at the moment. And so the question was, how do you do business, with utilities that either have a mandated standard, which was in the question, or maybe are choosing to go that way for other reasons. Can you maybe backtrack a little bit in terms of the green tariff? What does that mean? What is Nova Scotia actually doing in terms of acting on behalf of buyers, and how would that work with the utilities?
Yeah, no, great question. And so in regions where it's not possible to procure the power directly, then you do need to think about, going through the utility system. One of the things to keep in mind is, with coming back to this question of additionality, we think about procuring renewables. Typically, renewables that are procured through this kind of, corporate procurement and with some kind of a renewable energy goal in mind, they should be above and on top of any existing utility or state or provincial goal that exists. So, it's important to, as a buyer, to make sure that if you're going via a green tariff with a utility, that you're not basically paying more for something that they were going to do anyway, both because that's not a great thing to be doing as a buyer, but also because it's not going to actually help increase the amount of renewable energy that exists out there. And so buyers do have the potential to you do have a power in this situation, right? And so if buyers go to utilities and say, look, we really want to be able to buy renewables. One of the things that I've seen this happen actually in the US, if buyers are again, kind of powerful enough, is that even going not say directly to the utility, but also to the government of the state, or in this case, province. In Canada, that works great because the province and the electricity market are sort of one and one the same overlap. It's less complicated than what you have down in the States. And buyers can actually come and say, look, we're interested in relocating or growing our operations in your region, but we really want to be able to buy renewables. How can you help us? And that's actually a pretty easy ask for the government in a lot of ways. It's you're asking for less than if you go and ask for tax breaks or things like that, because you're really looking for just the ability to make those investments to have power built. So I think that's something that also is worth thinking about as a buyer if you're operating in a region where it's not possible to do this easily. There's also the potential to kind of go between provinces. And I think we've seen it happen as well, where you have buyers that are procuring power in Alberta, say, to cover their entire Canadian load. And that's quite common in the States as well, too, that you have buyers that will procure, they may be active in many different states, but they're not going to go and procure, 50 different contracts across.
Exactly. And you've kind of answered actually two questions that have come in here. One was around, with this green tariff setup, how can the buyer be assured that the utility is not importing to meet the PPA requirements? And I think the short answer is, if you look at Nova Scotia, you're seeing some transparency around the bidding process with the developers. You're going to see a new solar farm or a new wind farm being built, so then you get that additionality. But is there anything else you would say around how to make sure that that the utility is being transparent and not going off to the side and just importing from somewhere else, but is actually creating that additionality?
Yeah, I think, as you say, like that their processes are transparent, and that in contracts that you're signing with them, that those details are spelled out, right? And that's a really important piece. I saw that there was also a question about how curtailed energy is dealt in the PPA, and who takes the risk exposure. And that's another one where, in principle, that's really up to the buyer and seller to negotiate on that. I will note again, if you're coming from the US, Alberta is a little bit different in terms of, we have such a robust transmission system. We see very little curtailment of generation. But so it would be, I think, common that if the generator is paid to turn down generation, that that's taken into account in the contract for difference, so that there is you're arriving at some sort of fair agreement, just in the way that curtailed power does get some payment for the utility in that sense. But those are things that would all be worked out within the deal, and both sides have to be comfortable with it. In general, I would say one big thing is that the party that's best able to manage and understand a given risk is really the one that's usually better off to hold that within a contract, right? And so that's why you would have typically the developer is not shifting a lot of the construction risk, say, over onto the buyer, because that's really their job, whereas the buyer is going to be managing more of that price fluctuation risk, because they're probably going to be more naturally hedged in the market because they're using that power anyway.
Absolutely. And I imagine people are kind of getting the sense that these deals can be rather complicated, and lots of clauses and components to be included that cover a lot of these details, which is, I think, one reason why a PPA, to your point earlier, that covers a large footprint can be really attractive, so that you only have to go through this process once. I think there's some real benefit. There's a question around, what is the biggest benefit of a PPA? And again, every buyer has to decide that for themselves. But being able to cover off your entire load or all of your operations, if you're a company that has lots of different sites, I would say can be one of those real benefits. I'm going to move us along, but I have one quick one that I wanted us to touch on again. You talked about briefly the physical versus virtual, so I want to make sure people can understand the landscape here. Can you talk about the physical PPA a little bit, and what it meant to take sort of ownership and legal title of those electrons in that case?
Yeah, and it's, obviously it's very important when it comes to the contracting piece. I would say it's not super important when you're thinking about, what deal that you want to enter into. But just to give the example, if you look at the Alberta case, in order to sell power into the market, you have to be, registered with the ASO, with Alberta Electricity System Operator. And so the difference between the virtual and physical PPA, as I said, it's not that you're actually getting those electrons that are coming from the plant, but as you were saying, Rebecca, you're taking legal ownership of them. And as the buyer under a physical PPA, you would actually be responsible for then selling that power and having that relationship with the system operator or whoever is running that market. Whereas in the virtual PPA, it would be the developer and then ultimately, whoever is the operator of the facility that does that for you. And so again, there, I think the biggest question there is going to come down to, is this something that you're already doing, or that you have the internal capabilities and structure that you're set up to do? And so, because we do obviously have a lot of energy companies here in Alberta, I think sometimes we find companies that already have a relationship with the electricity system operator, and so it might make more sense for them to enter into a physical PPA. And I never want to say it's always going to be one way or the other, but in general, if you don't already have that relationship, there's not a lot of benefits with going then to set that up and making a physical PPA if you can enter into a virtual PPA, where again you're leaving kind of the dealing the system operator with the renewable energy project operator who has that experience and capabilities.
For sure. So I'm going to do one more slide before we move into the next section on market insights. So I want to just put up the buyer's roadmap and talk for a moment about this process, because to your point, buyers are going to go through a lot of steps here, and some are going to be more experienced. Some have different businesses, which make some of these steps maybe easier or harder. And to your point, if you haven't been into trading electrons before, this may not be the game that you suddenly want to get into right now. So, any highlights here in terms of how buyers and sellers work together, and any steps that are particularly tricky here, and of course these are resources that the BRC has available for folks in more detail. But we know that this process takes time. Why can it take a year or so, plus or minus 6 months, to go all the way from the left to the right here, Sarah?
Yeah, well, I think, one is you kind of see all the steps, and hopefully this doesn't scare people too much, but in general, buyers, you're often entering into an agreement that is a different way of purchasing power. And as we were talking about before, you're probably involving a lot of different teams internally. So you're certainly obviously going to need approval, from the financial side of things, from the CFO. But in particular, if the value that you're looking to get from the PPA is more on that ESG, it's more in the sort of relationship with, say, consumers or investors, then you're going to need to have that team be part of it. So you're really talking about this kind of cross-functional type project, and that can, slow things down. I think often also it's not uncommon for that first project to take longer and for buyers to start, say, with a small project. I saw we had a question actually even about, if it's common for group purchases, and there's a bit of a mix there. So there's some buyers that, will only essentially do group purchases and will only purchase small parts of many projects. There's other buyers that like to go ahead all on their own. And so it really, again, depends on sort of what you're looking for as a buyer. But starting small, and even starting small with a partner who's more experienced, can be one way that buyers get into this. Also, I think that we saw a lot through BRC, just having that buyer community and people talking to each other and learning sort of what they're likely to run up against is an important piece of it. But it's just, I think it's sort of a mixed message between, on the one hand, it is a long process. And so I think it's important to make sure that there is a champion and there is commitment to going through all of these steps that do need to happen. But at the same time, as corporate procurement becomes more and more common, it's, I think, less daunting because there are a lot of examples to point to. And so, it may be the first time within your organization, but you're not doing something that's, completely new out there.
Absolutely. And I would just round out the question around group purchases, or as it's often referred to, aggregation, to get the lingo out there. We did a seminar in the spring that talked about sort of the corporate 101, same as today, but we did a bit of a deep dive onto aggregation. So that recording is available on the website if anybody wants to have a look at that in particular. So I'm going to transition us to some more polling questions so that we can start to talk about the market in Canada and in Alberta. So there are going to be a couple more polling questions that come up here around the market. So the questions that we wanted to ask you guys were essentially sort of, what do you know about what we're going to talk about next? So how many power purchase agreements do you guys think have been announced in this space? And then what do you think the outcome of the Renewable Energy Program in Alberta, the REP program from a couple of years ago, what do you think? Was it positive, negative in terms of pricing per megawatt hour for the government? Was curious where you guys, if you know all the answers already, again, we'll kind of speed things up and go more in depth. Where do people think the market is? Okay, so fair mix of answers on the number of PPAs out there. So we'll answer that one in a moment, but it is a 22. And as you might imagine from Sara's analysis, the outcome was, yes, it was favorable for Alberta in terms of her analysis. So that's a great segue then, Sara, into this next part of the session. So you alluded to it a little earlier that it's been a few years that PPAs have been in this space now, and it was really kicked off by these REP rounds, this Renewable Energy Program. Can you talk to us about the genesis of the PPA market in Canada? Where did it start?
Yeah, so the PPA market in Canada started, after a similar market in the U.S. But I think it's fair to say that the renewable energy procurement program that happened under the previous government really kind of helped kickstart that. And so when the Alberta Energy System Operator, under the direction of the government, put together this program to procure renewable energy so that Alberta could meet its 30% renewable energy target. What happened as a result of that, it was a time there weren't a lot of regions that were operating, or that were had competitions like these, excuse me. And so you had a lot of interest in the Alberta opportunity, and we had a lot of developers that came in and said, okay, look, there actually is a lot of really pretty good wind and solar resources here. And so there was both a number of projects that went into the project pipeline, and then I still remember however many years later being in the room when the REP prices were announced, and everybody's, it sort of sounds cliche, but it's really true. There was a big gasp in the room when the prices were announced, because they were so much lower than people were expecting. I will note they were not actually really any lower than similar contracts that were being signed across North America at the time. But until you see something happening at home, it doesn't, I guess, become real. And so that, I think, really sparked that interest of, oh, actually prices have come down quite a lot from the early days when Alberta was building out some of these early wind projects. And so we've seen then there were a number of projects, of course, that didn't get contracts under that REP, and which has now come to a close. And we've now been seeing really a dramatic uptick. And I think you'll see that in the deal tracker. You were saying you need to reformat it now because they don't even fit anymore. So that real exponential growth of deals happening.
Well, so super segue. Let's put up this mysterious deal tracker that we keep referring to. So the Business Renewables Center has just made an update for Q3 to our deal tracker, which tracks all of the publicly announced agreements in the country. So where a buyer and a developer have signed on for X number of megawatts over X number of years for one technology or the other. So the way you look at this chart is over time. Of course, there weren't that many in the early days. We bundled a couple of years together, as Sarah was talking about. It had that sort of start, and here we are with the largest bar being 2021, and we're not even done with the year yet. So there's a mix of solar and wind on here, but I think clearly illustrates this amazing upward trend in the market. And so somebody made an interesting point the other day. It's not so much that the market has evolved, the market has been the market, but the buyers and the activity has really evolved, and just the pace and the scale is quite miraculous, frankly. But any highlights that, when you look at this chart, Sarah, what are sort of the big takeaways for you?
I think that scale point that you're making, right? So if you look at the size of some of those projects that are coming in 2021, and I have a little screen on my computer, so I'm struggling to read them, but I know that that's on the website. You can see that those are getting much larger. So you're seeing both more deals happening, but also really large sizes of deals. And I think it's also just, it's impressive that this is continuing to happen during the pandemic and during a time when we're seeing a lot of slowdown in other energy investment as well too. So I think it's, to me, the high level message here is really that this market has taken off and is really becoming established from, in a relatively short period of time. And again, this is really, it's both phenomenal and it's also pretty similar if you go back to the original, earlier days of the US deal tracker as well. Something very similar happens there too.
Yeah, and so we're seeing lots more sectors being represented here. We're seeing multiple deals within sectors or within companies, and so all of that speaks to the growth. All right, I want to move us along because I want to make sure that we talk about your rep analysis. So what made you want to go back and do a little look back? Why was the timing right? And so what did you undertake, Sarah? What were your findings?
Yeah, so so this is some work that I did with Blake Schaefer, who's also at the University of Calgary in the School of Public Policy. And we were looking at what was the results of the contracts that were signed under that rep deal that we were talking about, really just to see, where did things land at the time. It was a highly politicized as things tend to be, a highly politicized process, and a lot of claims about how it's going to cost a lot of money. And so we, wanted to know where that landed. And so basically, what we did is go and look back, and the caveat here is that we don't have the project level details for the contract price. So this is sort of an average price. We'd love to see actually ASO do this for the contracts. But I think what the high level message that's interesting about what this came out is that the projects, the contracts that the government procured under REP really, ended up in the money, even for the energy value of the project alone, not mentioning, any carbon offset value as well. So that is on average, the government of Alberta paid $37 a megawatt hour for the power from these renewable energy projects, and the value that they received in the market was 38 and change per megawatt hour. So that means that for every megawatt hour of power that the government procured, they got that carbon offset value plus, $1.35 back out of the deal. And so you might say, okay, well, so how is that possible, right? So why wouldn't the developer have just built these themselves in that case? And I think there's sort of a couple of factors that come in to play there. So one is really just the ability to to hedge and to provide that certainty. So developers, if they were to build this project and they were to need to get their own source of financing, they may actually end up having to pay a higher cost of capital, which would actually increase the price of power. So there is a certain ability to actually lower the cost in this way. But then at the same time, I think we are starting to see interest in potentially in projects moving ahead on a merchant basis as well too. So, I think a little bit of both are in there, but that's that's where things landed. And of course, again, with the caveat that this is, for the time that these projects were operating over, I think it's about a period of a year and a half, doesn't mean that, of course, every project that gets signed under a PPA will be in the money like this. But it shows that, you're not necessarily going to be paying a lot to enter into projects like these.
Absolutely. So you talked a little bit about sort of the politicization of all of this, but in this case, it was actually really helpful that the government ran this process and policy added value by providing some transparency. So can you talk about, what was the benefit, the ramifications of going through this? And even though it may not still be continuing today, and you can talk about what you think the future holds, but what did this enable and maybe what next?
Yeah, so I think it really did enable this price discovery and kind of filling the market with potential projects. And I think we're seeing, the result of that in terms of things started off, I would say, I think it's fair to say, with a bit of a buyer's market for projects. I think that's, as those projects are getting kind of taken up in that deal tracker that we saw, that's starting to shift. But if I put my public policy hat on, I think this was a really good example of public policy where you're really doing this role of kind of seeding the market. You're providing that price discovery, you're kind of showing with a pilot, if you want to call it like that, that this kind of deal is possible. And then that enables further private sector involvement. And in particular, again, that really splitting like the details of the contracts and the ways that they were done really, I think, again, gave the right kind of risk to the right parties in these, right? So the government is they control public policy writ large, and so they have more control over the future of the energy market than any single developer does. But the development again rested with the developer, and they had to build it for the price that they said they were going to, and there was no cost overage or things like that as well too.
So what does your crystal ball, tell you? What else should we be watching for in the future? What is the next webinar going to tackle in depth?
So I think there's a few different things. I mean, that certainly on the one hand, these bigger projects. I think on the flip side too, though, once the market starts to mature, then I think you can see more of that aggregation and smaller players kind of entering into the market. So more opportunities. There's still some more room, I think, in Alberta for more projects to be happening. But I think it's interesting to think about, can somebody open up that Saskatchewan market, especially a big buyer that might be able to have some weight or some influence with the government there. In the longer term, I think looking at transmission lines and what happens with that potential, were the transmission lines, say, into BC or down even into the States to be built out more, that would really create a lot more room even for development of the resources within Alberta also. So a lot of interesting moving parts going forward, but I think certainly a lot of potential for more deals to be done.
Absolutely. And so you kind of alluded to it in terms of the supply demand. I mean, what is your take? We often hear people, if you have a near-term target to meet your corporate sustainability goal and you're not already in a negotiation on a particular solar or wind farm, we often hear people say you might be waiting a little while because you've got the Amazons of the world coming in and buying things up. But we also know that the market seems to be working here in Alberta. And so, if there is demand, then the supply will likely try to match that. What do you see in terms of that supply demand dynamic in the next couple of years? And also, what does it mean for prices? How are prices going to fluctuate as a result of that?
Yeah, I think one thing to remember is Alberta is still a relatively small market, I think. And so that does lend itself to a bit more of this volatility of kind of supply building up and then being able to take out a big chunk of it even through one deal. But that said, in so much as, we do still have a lot of space and a lot of land, right? It's a big province. And so I think there, to your point, as long as there are buyers looking for deals, there are going to be developers that are interested to put projects together. It may just be a question of what's available to start construction today versus kind of in the future. So I think it's that's something I think I would be watching certainly. And I do think that as the rising carbon price increases that carbon offset value, that in the chart that's up, that's the carbon offset value at the price today, that can grow pretty significantly over time. And so that we may see that driving even more projects kind of in the midterm.
Super, thanks, Sarah. So I'm going to take just one or two more questions from our chat box and then start to wrap it up. One of the questions was around duration of PPAs. And so, the slide earlier sort of said, oh, it's maybe, 12 plus years to in terms of duration of contract. If somebody's interested in one that's shorter, like a 5-year kind of PPA, can that be done? And what are the ramifications? Because, usually there's trade-offs, right, Sarah? So if somebody gets a 5-year PPA, what does that mean for the price that they're getting from the developer? Because of course the developer is going to look for that long-term certainty, right?
Yeah, I think that's going to be the biggest things. Is so the shorter the duration, typically the higher the price, because it means that the developer is having to, cover more of their costs, at least whatever cost they can't get financing for, say, in a shorter period of time, or they're having to go to other sources of financing that may come with a slightly higher cost of capital. And so it's not impossible, but if you get into that kind of 5-year and less range, you're really almost starting to talk about a different kind of deal where you're maybe providing some short-term certainty, but there is still this interest in a merchant deal later on. I think also within that time frame, that's where again some of these aggregators start to become more important, where they might then play that role of taking on the longer term contract, but then selling it off in that shorter time. But again, as a buyer, I think you have to be prepared that those prices are going to be, higher because you're not providing that long-term certainty that really drives that cost of capital down. So, for buyers that have as long as you have a long-term need for electricity, that's where you can really start to see the best prices, is when you're able to leverage that.
Yeah, absolutely. Thank you, Sarah, for that. So Sarah has graciously offered to share her email address if you have burning questions that unfortunately we didn't get to today. This is your chance to grab her email address. The same here. I'm always happy to be in touch with folks afterwards if you have questions or comments. I do want to also just give a quick shout out around our upcoming events that we have. So if you liked what you heard today and you want to hear more, we do have a couple of more things happening. So this was our kickoff. In a few weeks, we are going to do a deeper dive onto the social part, the social justice component, with a real focus on Indigenous participation in large-scale renewables. So I know there was a question about FNPA, and so this is a theme that BRC is very keen to get more active in and support going forward. The same with some gender equity discussions. We will have a members-only session on that same theme at the end of this month. And then for our buyers, I want to make sure that you guys are all aware of a bootcamp opportunity. So this was the 1-hour version. If you want the 2-day version of how does the market work in Alberta or Canada, and how do PPAs work, then the bootcamp is for you. And if you're also a buyer and you just want to hear more examples from others, some experienced buyers in this space, every couple of months, we do a buyer's phone call. And so Telus and Labatt are going to be hosting our next one. So it's another opportunity for you guys to kind of hear from folks who are active in this space and ask lots of questions of them. One slide just to show you where you can get more information. We would love to talk to you if you have interest in officially joining a BRC. We can tell you what that entails. And then, of course, I want to make sure that I end with a big thank you to our sponsors. Marathon Capital, Greengate, and EDF Renewables have been great, not just with their sponsorship, but in their support of BRC over the years. And so we're, again, very, very grateful to the three of them for making today happen. And so Sarah, a huge thank you to you as well, of course, for being the sole panelist, as it may be, answering lots of questions and taking us through a really interesting journey. It can be complicated at times, but you did a great job, I think, of highlighting the key points and making it simple for folks to understand. So thank you all for joining us. We've appreciated having a big crowd today. Stay tuned for more events, or we look forward to getting to know you more in the future. Stay safe and take care, everyone. Bye-bye.